As a project manager, you're constantly dealing with resources, budgets, and the flow of money in and out of your projects. While you might not be an accountant by trade, understanding the fundamental tools that govern your business's financial health is incredibly valuable. One such foundational tool, even within user-friendly accounting software like FreshBooks, is the chart of accounts. Now, before your eyes glaze over at what sounds like an overly technical accounting term, let's simplify it. Imagine your business's finances as a well-organized library. Each book in this library represents a specific type of financial activity: money coming in, money going out, what you own, what you owe. The chart of accounts, COA, is simply the master list, or the comprehensive catalog, of all these books or categories that your business uses to organize its financial transactions. In FreshBooks, the chart of accounts isn't just a dusty ledger. It's the underlying structure that helps you categorize every single financial event in your business. This categorization is crucial for several reasons. It allows you to track where your money is coming from and going to, helps you understand your profitability, assists in tax preparation, and ultimately, gives you the insights needed to make smart business decisions. Why is the chart of accounts important even for project managers? You might think, I just need to send invoices and track expenses. Why bother with this chart of accounts thing? Here's why it matters. Clear financial visibility for projects. When you classify project-related expenses correctly, e.g., software licenses Project X, contractor fees Project Y, your COA helps you see exactly how much each project is costing you. This is vital for managing project budgets and assessing profitability. Accurate reporting. Without a proper COA, your financial reports, like profit and loss statements, would be a jumbled mess. The COA provides the structure for FreshBooks to generate meaningful reports that show you how your business is performing at a glance. Informed decision-making. When you know exactly where your money is flowing, you can make informed decisions. Are you spending too much on certain categories? Are your income streams diversified enough? The COA provides the data to answer these questions. Tax preparedness. Tax time becomes significantly less stressful when your finances are neatly categorized according to established accounting principles. Your accountant will thank you, and you'll avoid headaches. The 5 main account types in your chart of accounts. Every chart of accounts, regardless of the software, is built upon 5 fundamental types of accounts. Think of these as the main sections of your financial library. Assets. These are things your business owns that have value. They can be tangible, like cash in the bank, office equipment, or accounts receivable, money owed to you by clients, or intangible, like intellectual property. Example in FreshBooks. Your checking account balance, a computer you purchased for business use, outstanding invoices to clients. Liabilities. These are what your business owes to others. This includes things like loans, credit card debt, and accounts payable, money you owe to suppliers or contractors. Example in FreshBooks. An outstanding bill from a software vendor, a loan from the bank, unearned revenue, money received for services not yet delivered. Equity. This represents the owner's stake in the business. It's essentially what's left over if you were to sell all your assets and pay off all your liabilities. It includes owner's contributions, retained earnings, profits kept in the business, and owner's draws. Example in FreshBooks. Initial investment you made in the business, profits your business has accumulated over time, money you've taken out of the business for personal use. Revenue, income. This is the money your business earns from its primary operations. In FreshBooks, this is primarily your invoiced income for services rendered or products sold. Example in FreshBooks. Income from design projects, consulting fees, sales of goods. Expenses. These are the costs your business incurs to generate revenue. This is a very broad category and can include everything from office supplies and software subscriptions to marketing costs and contractor fees. Example in FreshBooks. Rent, utilities, internet, marketing expenses, salaries, travel costs, software subscriptions. How FreshBooks manages the chart of accounts. One of FreshBooks' strengths is its user-friendliness. While it definitely has a chart of accounts working behind the scenes, it often simplifies the direct interaction for users, especially those without an accounting background. Pre-populated categories. FreshBooks comes with a standard, pre-populated chart of accounts with common income and expense categories. This means you don't have to build it from scratch. For many small businesses, these default categories are often sufficient. Customization is key. However, the true power lies in its customization. You can easily add, edit, or even inactivate account categories to perfectly match your specific business needs. For instance, if you're a web designer, you might want specific income categories like web design services, SEO services, and maintenance packages. Similarly, for expenses, you might add hosting fees or stock photography. Connecting to transactions. When you record an expense in FreshBooks, you'll be prompted to categorize it. This is where you're actively using the chart of accounts. By selecting the correct category, you're telling FreshBooks exactly where that financial transaction belongs in your financial library. Similarly, when you create an invoice, you're associating the income with a specific revenue account.